Welcome friends, today we're doing another short and snappy market update. I think it's about time as there are constantly things happening that we definitely need to address. I would say let's take a quick technical look at the whole thing because as mentioned, there are two zones that are extremely important and must not be broken, otherwise we might have a problem. Let's take a quick look at the actions of the Fed and what's going on there in the near future. We'll also talk about the coming weeks and how things might proceed. I think this will definitely be an important video. So friends, as always, leave a like and a comment. Especially in these market phases, I rely even more on your support. Thank you very much for that. Let's take a look at the whole thing from a technical chart perspective. From a technical chart perspective, we are very, very tight here with Bitcoin on the Manfred chart with the MACD down here. And that is, of course, a bit dangerous. So you have to say, take a look at this here. If we should cross here and see a bearish cross, then it could become dangerous. You really have to say it like that because in the past, this has heralded the bear market. Since then, we have transitioned into the bear market. The lines are getting closer and closer. This has, of course, also happened in the past. No question about it. But the closer they get, the more dangerous it becomes. That's why it's quite important now that we don't go significantly lower with Bitcoin again. I am of the opinion like this. $75,000, we should not go below this for now. That would be very, very important. From a technical chart perspective, especially because we see exactly the same with the 200-day moving average. Look at this yellow support zone. We have tested it 3 times here, and each time we have been rising again afterwards. And here, the price is also in this range of $77,000. If we break through there sustainably, it could also herald the bear market. I mean, in the past, we have tested it initially as well. But if we break through there sustainably, then in the past, it has heralded the bear market. It would be tough if we were to fall below here. Sustainably below this $77,000, we would target the 50-day moving average, which is at $46,000. And I think no one is eager to see these price targets here. That's why it remains very, very exciting at the moment. What makes me optimistic, however, is simply the fact that we have been over 50% bearish on the S&P 500 for more than 8 weeks now. The masses are really fearful. The masses are afraid. The masses are bearish. This has been the case for over 8 weeks. This is a new record. This was never the case for so long in any previous financial crisis. Very, very positive. Because when we think so negatively, I can imagine again that the market is slowly at its low point. Because you know very well, the more fearful the sentiment, the more likely it is that we have already seen the bottom. But we also saw in recent days that Jerome Powell gave another speech. In the speech it was said, hey, the US economy looks solid so far, the labor market is really in good shape. It's really nice what he said there. However, he also mentioned that due to the high tariffs, we are likely to see even stronger inflation. And that would be really dangerous, because that would likely send us into a recession. And above all, this would also eliminate the loose monetary policy. Regarding the national debt, he also said they are not unbearable, which actually doesn't make any sense. They have to refinance over $9 trillion this year, which is the largest refinancing ever. That's why I don't understand this statement from Jerome Powell at all. Trump certainly didn't celebrate the whole thing. There's definitely some tension between the two of them right now. And I have to be honest, I think this is just their plan, and it's supposed to go this way. This is supposed to continue causing uncertainty, fear in the markets. Because what we are seeing now, we already had in 2018. In 2018, Trump was president for the first time. Just take a look at this headline. Slump. In US markets, Trump lashes out at the Fed again. What is happening now we've seen before. This is nothing new, you should be aware of that. Trump is currently exactly the same as back then. Only now people are falling into fear and helplessness, even though it's exactly the same game as always. They want to create uncertainty. I think it's been clear by now with the tariffs. Take a look at it. The tariffs were completely lifted, except for these China tariffs. The Fed itself has said it is absolutely ready to support the markets if necessary. And he also said here that China should finally sit down at the negotiating table. I'm also sure that they will reach an agreement with China. I mean, look at this. 80% of all Gucci items come from China. Prada, 60%. Louis V, the same. Hermes, the same. And so on. You see all these brands produce in China. They will never produce in America. Then things would become 3 times more expensive. That simply won't happen. I'm quite sure of that. In terms of skilled labor and such, it will be very, very difficult. And secondly, much, much more expensive. That's why they will reach an agreement one way or another. What's interesting here is that some good analysts also assumed that this was already the bottom. Because we've seen the worst for now. I mean, technically speaking, it would make sense. I mean, every time. When we tested this level, we initially had a nice upward trend. And here it could be the same again. Many expect that we have now seen our bottom for the time being, that over these summer months we will probably still see a bit of a rise, moving sideways but generally experiencing rising prices, and that it will become really interesting again at the end of the year, because what must be said? The risk of recession was strongest here with the tariffs at 66%, but that was also the time when we were at our lowest point ever. Exactly here, when people had the highest fear of recession, we built our bottom with Bitcoin. And now one just has to ask, can this fear of recession continue to rise or not? Of course it can. Many are now expecting that inflation in the USA will continue to rise. But honestly, you know very well the tariffs won't come into effect as discussed here. What is supposed to become so much more expensive that inflation will skyrocket? Just as an example. Oil, for example, has become extremely cheap. This kind of thing boosts the economy and also dampens inflation. I think one should pay attention to such figures. Look at how much we have, only been falling since 2022. This is very, very positive and would also speak for better inflation. I think we have already significantly fallen here for good reason, as far as the recession is concerned. And I think the USA will narrowly avoid a recession here. I think that's the goal, which is why they are currently causing this great uncertainty. I already told you days ago that the Fed is slowly starting to bring new money into the markets. You can see this quite well here again. Meanwhile, the M2 money supply in the USA is also rising. Very, very important. People aren't really interested in the China M2 supply, the Euro M2 supply, or the Japan M2 supply. Bitcoin correlates with the US M2 money supply. And the fact that it has also risen in recent weeks is incredibly good. In my opinion, this could also ensure that we slowly start to see this liquidity in the markets in the coming weeks, and that we finally see reasonable prices here again. I mean, this global money supply has increased by over 4.5 trillion US dollars just this year. That's simply 3 times the entire Bitcoin market cap. How can one not be absolutely bullish on an asset like Bitcoin, which is completely immutable, which is so limited? Bitcoin is deflationary, rarer than ever before. One can only be more optimistic about the future, especially with this monetary expansion. We are really still undervalued here when you put it into perspective. And of course, all of this is currently great for Bitcoin. We are now at a Bitcoin dominance of 69%, almost 70%, if you exclude the stablecoins. And that's crazy. It just shows how much money can actually still flow into Bitcoin. This ultimately shows how cheap these Bitcoins are in comparison. These Bitcoins are really way too cheap. In relation to Bitcoin, then someone should tell me again that you can't see a 10x or something like that with Bitcoin. Guys, if we drop in Bitcoin dominance here and a few billion are reallocated, then some Bitcoins can easily do a 10x or 20x. That's really not a big deal here. But for that, we need liquidity, a clear monetary policy, and security regarding the USA. And I think we are currently on a good path. Otherwise, there's really not much more to say. I hope you enjoyed this video, and I hope you also have a wonderful Easter celebration. I wish you happy holidays, and with that, until next time, friends. Bye.